Hello. As we approach the end of an extremely turbulent and difficult year for many people, our attention switches to what lies ahead in 2023, specifically for the local Cheadle property market. My name is Maurice Kilbride, owner and founder of Maurice Kilbride Residential Sales and Lettings Limited, and I have been selling homes in SK8 and SK3 for over 25 years, during both good and more challenging markets, and we're certainly in a challenging market right now. As we hurtle towards 2023, it appears that the housing market has hit something of a perfect storm. Mortgage rates have risen to rates not seen in years. A typical house now costs around 9 times the average UK annual salary, and homeowners have started to see values dropping. This was most noticeable in November, when average house prices fell by 2.3%, the biggest monthly fall since 2008, according to the Halifax, Britain's biggest mortgage provider. In October, the drop was a modest 0.4%, so the acceleration was quite alarming for many home sellers and put the skids under the property market. Personally, I think quoting actual numbers of possible house price falls or increases is a bit of a crapshoot, as things can change remarkably quickly, as we saw in Q4 of 2022. However, here are what 4 of the larger institutions with a dog in the fight have had to say, along with the government's own official forecaster, the Office for Budget Responsibility, who have predicted a 9% fall in house price values in 2023. The Halifax, their 2023 prediction is an 8% drop in house prices. The Nationwide, their prediction is a 5% drop in house prices. Rightmove, biggest property portal, says that prices, or average asking prices, will drop 2%, and Zoopla, their 2023 prediction is a 5% drop in house prices. Now, others are predicting much larger drops of anything from 10% to 30%, and I guess that could be possible in some cases, as the market can vary considerably from area to area. But an affluent area like Cheadle, with high employment, is less likely to see such dramatic reductions unless there is a massive influx of stock and rates don't stabilise. Much of the downward trajectory has been triggered by rapidly rising interest rates and a huge hike in mortgage repayments. The average 2-year fixed rate is now 5.8%, with a 5-year fixed rate at 5.61%. This time last year they were at 2.34 and 2.64 respectively. But after 9 consecutive monthly rate rises, the question is whether rates will stabilise or continue to go up as the Bank of England continues to battle rampant inflation. What does that mean in pounds, shillings and pence? Well, a typical buyer with a £250,000 mortgage fixing for 2 years over a 25-year term will now be paying something like an extra £400 a month more than a year ago. That's a 43% increase, or around £5,000 a year. Many buyers will be forced now to lower their buying price range. Given these huge hikes in the cost of a mortgage, on top of the cost of living crisis and the wider economic uncertainty, both buyers and sellers seem to have put their moving plans on ice, at least for now. Everyone has finite disposable income, and with the staggering rise in the cost of almost everything, stagnating wages and rocketing rents and mortgages, something has to give, and many suspect it will be house prices. Mortgage approvals fell by 10% in October to 59,000. This was down 20% on the 74,400 in August, according to the figures published today by the Bank of England. The property portal Zoopla has claimed that demand for homes has dipped 50% on the year, with the number of sales agreed down 28%. Now, those of you who follow my monthly analysis of the local Cheadle property market will know that we have seen numbers of average daily property views on Rightmove drop by 56% over the last couple of months. It is important that despite all the doom and gloom, that sellers realise that prices rose artificially during the pandemic. So even with the continuing economic headwinds, lower demand and downward pressure on prices, it is unlikely that the Cheadle area will see prices fall back to pre-pandemic levels. Sellers just need to be realistic with their initial asking prices. Remember, they will expect to pay less for another property too, so it's all relevant. Zoopla says there will be 1.3 million homes sold in 2022. They are still predicting around 1 million sales in 2023. To put this in context, still considerably higher than the lows recorded between 2008 and 2010. However, other property market forecasters are suggesting transaction levels could drop as low as 870,000. So, looking at all the indices and listening to the great and good of the property industry, whilst staring into my crystal ball, my view is we will see a lower transactional market in 2023 in SK8 and SK3. There were 1,373 properties sold in our area in 2022, and in the famous words of Bruce Forsyth's Play Your Cards Right, for my older viewers, I'm going lower next year. I feel that many first-time buyers who can afford to wait may sit it out and see what happens over the next 3 to 6 months at least. And some buy-to-let investors, unless buying with cash, may just sit on their portfolios for the time being. I think there will be more clarity of both buyer and seller intentions by the spring or Q2 of 2023. But all of this is speculative and will be determined by the direction of interest rates and the cost of mortgage repayments. However, I guess that if there is a lower number of homes coming to the market for sale, it may help protect prices to a degree, but there will be more than likely enough of what I call the needs-based buyers and sellers, especially those with cash who can spot an opportunity to take advantage of the weaker market to keep the market moving. There will always be those moving for work, schools, sadly affordability reasons, births, deaths, and matrimonial issues. Sellers may need to accept that buyers cannot and will not pay 2022 prices for their home in 2023. But let's be honest, I think most of us would prefer a gradual shift back to a more realistic, calmer, and sustainable market. Some price correction might stimulate more buyer confidence, and therefore 2023 should remain a good time to sell or buy, provided you have costed everything out and it is affordable to do so. If you are thinking of selling your home in 2023 and would like to know where to position it price-wise in the current market to ensure you sell, please do not hesitate to call me on 0161428 3663, email me mk@mkiea.co.uk or message me via WhatsApp, Facebook or Instagram. In the meantime, on behalf of Joe, Patrick and myself, may I take this opportunity to wish each and every one of you a very happy and healthy New Year. Thank you for watching.